Welcome to the Real Estate Institute COVID-19 series. Today we have Mandatory Code of Conduct, Commercial Leasing Principles. I'll hand over to Leanne and she will take you through this. Thank you.
Hi everyone, thanks for joining us. I'm Leanne Pilkington, the President of the Real Estate Institute of New South Wales, and with me I have Tim McKibbin, our CEO at REI. I have Michael Miller, who's the Director of Mediation Services and the Deputy Registrar of Retail Tenancy Disputes, and Sue Woodall, who is the Acting Executive Director, Small Business Commission. Thanks so much and welcome everybody. Tim, I'd like to hand over to you firstly to go through the PowerPoint presentation and give us a set the scene, if you will. A couple of things for the attendees to remember. Firstly, the PowerPoint will be available on the website after today's session. Secondly, you are able to ask questions. I've got a whole lot of questions that have been emailed to me ahead of time, but please feel free to ask questions throughout. And also, Sue and Michael would really love to understand where the pain points for you guys at the coalface are. So please give us that feedback as well. All right, Tim, over to you.
Thanks, Leanne. I think Nerida's in charge of the slides, isn't she? Thanks, Nerida. So I won't go through all of the dot points there, and the reason that I won't is that I'm sure people can read them for themselves, and they largely speak for themselves. But nonetheless, we can make a couple of very quick observations. Firstly, the code is a very flexible document, I think, and it prescribes a framework within which good faith negotiations are planned to take place. So the very first thing is to understand who's in and who's out. Now, to be an eligible business, you have to initially satisfy the JobKeeper program, the Commonwealth JobKeeper program. So that's at $1,500 per employee. I'm sure everybody's aware of, and be less than $50 million. So it does, and it's been well publicised, a moratorium on evictions during the period, during the COVID program period. The code, of course, at the federal level was designed to be a document consistent right across the country, and they then handed that document to the states, and it is now something less than consistent right across the country, which won't take anybody by surprise. Very quickly in this area, I've teased out a few of the terms which they're using, must and should. Now, you can see in the first word, that's to be read literally, and the second one clearly gives you some form of discretion as to whether or not you, as part of the good faith negotiations, you want to adopt the should approach to that. And it's important to read those words carefully. Turnover and revenue, I'm still yet to fully understand what those is meant by that, because they use them somewhat into interactionary. So it is still for us to decide exactly what that means. Proportionality principle, we'll get into that a little bit later on, but essentially it's about, as our Prime Minister regularly says, about sharing the pain. Well, that's what we're going to be doing, is sharing the pain. I spoke to you a second ago about what the relevant period is, and that's the COVID pandemic period, or CPP as we call it, and that will go on for the length of the JobKeeper program, or it'll be extended by the government should they decide to do. This is a good slide that talks about what we do and what we don't know, is because at this stage we thought when we were going to air about half an hour ago that we wouldn't know what the start date was because we didn't have the regulation. But whilst preparing for this presentation, the regulation came through. So we'll know a bit more about that, and we'll put that up on the website also now that we will have a date. Nerida, you there, Nerida? Yeah. So key principles. It's about the financial risk of the parties here, and I think this is important. And whilst these it is somewhat fluid in this space, and that is, I think, deliberately so that there is parties can manoeuvre around. Nonetheless, there is that expectation once again of understanding where the risks are and having parties be able to share that risk, or will share the financial pain, I suppose. And we spoke about the JobKeeper program, how that fits in, and importantly here that the tenant must be suffering a financial stress as a consequence of the of COVID-19. So if there is something else that's happened to you and it is not the tenant and it is not directly related to that, then you would fall outside of it. Now, obviously, as we look at that, this is where we're very grateful to have our friends from the Small Business Commissioner's Office to help us, but it is going to be some evidentiary issues in here which we are going to have to grapple with to determine what information is reasonably required. Interestingly also, even though the code only applies to an eligible business, and which is what we said a second ago about the JobKeeper program and also being under $50 million, the code has an expectation that people who are tenancies that are outside of the code, it would also be an expectation of good faith negotiations as well. And again, I think everybody can probably read that for themselves later on, and it talks about what has to be, and I think I've touched on some of that already, narrative, so we'll move forward. Now, proportionality principle means that there will be the sharing of the pain, so to speak, if I can use that expression, and that's calculated on the turnover reduction of the tenant. And this is what I spoke to you earlier about revenue and turnover. So I don't know at this stage whether or not those who drafted the code specifically wanted to use those terms differently for different purposes, or whether or not it is something that they consider to be the same. I don't know, but we will have to get to the bottom of that as well. So in the case where the tenant is completely closed off their business and there is no revenue, then clearly the rent waiver and the deferral would be 100%. So they would be entitled to a 100% deferral. Sorry, a combination of the rent waivers, which is basically free rent, if you will, the rent's gone, and a deferral of the rent. There we go. So importantly, in relation to the rent waiver and the rent deferral, is that the rent waiver must make up 50% at a minimum of the total support package. So whatever the rent may have been, and let's say it was $10,000, then you would be deferring only 5,000 of it, and the other 5,000 of the rent would be effectively written off. That is the waiver. There is some examples of how that is applied later on in the presentation, but your source of truth here will be back to the code, and I think we are going to also make the code available to you in a download on a link that will accompany this. So that will also be available. But in that respect, you should also have a look at Appendix 1 in the code, because that does form part of the code itself and is an example of how the code in regard to proportionality of sharing the costs here will be applied. Now, in relation to the deferral, sorry, I seem to have a voice that loves Siri. So my apologies. But the payment that starts to come back, in other words, when we at the end of the COVID period, when the deferral amount has gone across, and is now ready to be repaid. That is to be repaid during the term of the balance of the tenancy, or 24 months, whatever is the greater. So if we turn that on its head, the minimum amount of time that the tenant would have to repay the deferred rent, obviously the rent that has been waived is gone, the deferred rent, the minimum time would be 24 months. So this is an example where, like we said earlier, about somebody who had lost all of their revenue. So the business was effectively closed and the rent was $10,000 a month. In those circumstances, 50% of it at a minimum would have to be waived, and then the other 50% would be deferred. Okay, so you can see here that the proposition, at least, is that the code expects the tenant and the landlord to share the downturn in the tenant's business. So in this case, the tenant's business went down 100%. So both of the parties were going to share that pain by writing off 50% of the rent, which is what the landlord didn't get at all, and then the other 50% of the rent the landlord would get later on. So that is the philosophy, if you will, of the code. The next one is probably a more practical one, where, or hopefully a more practical one, where there's been a 30% downturn, and as you can see, working your way through that example as well. So there's only been with a $10,000 rental. That is now been reduced to $7,000. The rent, sorry, it's been reduced to that. So the write-off period is going to be $3,000, and again shared between the parties. If there is any recovery of outgoings and the like, so over the weekend you heard that the Treasurer announced that there would be a reduction in land tax, and these sorts of things will be coming back. So if that comes back, then back to the proportionality principle, the landlord is expected to share those gains, if you will, if we can call it a tax refunded gain. When that money comes back, the landlord would be expected to share that with their tenant. So we said at the outset that there was a prohibition on evictions, which there is. For non-payment of rent is one of the things that can't be done. Rent increases, however, there is an exception, I think, and maybe our friends from the Small Business Commission can help me out here later on. There is an exception, I think, in retail where there is an exception in relation to increases. Not allowed to claim on a bank guarantee, so that's against all securities, regardless of whether it's a bank guarantee or a deposit, a bond, I should say, or some other guarantor that's guaranteeing the lease. Interest, you can't charge interest on the deferred amounts either. And again, I think we've dealt with this in the 24 months, taking into account a reasonable recovery period. So again, all of these things are up for negotiations, and the tenant can actually say, I don't need all that time, I'm happy to pay it quicker. Or the tenant could say, I don't think I can do it in the 24 months, can we have a discussion? So the ongoing obligations of the tenant, this is not to say that the tenant says, well, I just don't care about this anymore. I'm just not going to comply with anything because there's nothing you can do for me. That's not correct. So this relates only to the inability, and it is the inability, not a perceived inability, but a demonstrated inability to be able to pay the rent. And if the tenant was to fail to comply with the substantive provisions of the lease, so that is securing the property from being damaged and a series of other things like in that space, then they would forfeit they would forfeit the benefit of the code. Mediation. This is where Michael and Sue will be assisting parties who are unable to come to an agreement in relation to what's going to work for them within the code. They will be assisting in those places. That's not to say, and it isn't to say, that the parties need to go there to get their agreement put into some document and then made binding. You don't need to do that. You can work it out between yourselves and then agree that. Obviously, you'd want to do that in a document. But if you're in a position where you can't agree that, then you'll be turning to Michael and Sue for assistance in that space. So where to now? Stay close to the announcements that we're making. Like I said to you a second ago, we only found out about half an hour ago what the start date of the code. We'll make that available. We have also made available a couple of documents that would help you. So in one document is to the tenant, and in that document is a set of standard questions that you might choose to ask the tenant to give you the necessary information to assess their circumstances and then to have a conversation with the landlord. That said, if somebody already has the JobKeeper program, if they've already ticked that box, then you can obviously assume that they are qualified for the code because they've hit that 30% because they've got that that come in there and have been able to justify that to the government. And I think that's it, Nerida, isn't it? Yes, thank you. I'll hand back to Leanne. I know I went through that rather quickly, but I think it can be read and understood.
Yeah, totally. And let's get to the questions. One of the questions that has been asked frequently is because a lot of commercial landlords and tenants have already come to agreements prior to this code coming out. What happens with those agreements? Are they able to be held, or do the agreements have to now be renegotiated in line with this code?
That one sounds like it could be a question for me. So,
okay, Michael.
Can you hear me all right? Do we do a sound
absolutely.
check? Sorry.
Yeah, no, you're good. So
I think we're already seeing a lot of agreements being made as well without needing to come through the mediation services. So a lot of your members would be familiar with our services because we've been running the mediation services since, 1994, the Retail Leases Act was originally introduced. And there has been a mandatory mediation requirement essentially for retail lease matters since that the introduction of that one. So we do see them. We see them come in and we see them disappear even before we really get to apply a lot of our skills sometimes, because we find that by chatting to us at an early stage, if you haven't already resolved it, you can go away with some key understandings, maybe setting a bit of expectations, and then you can actually resolve it before that you need to go down a more formal pathway. But then, of course, we see a lot of matters come through the formal pathway as well. So let's say you're in that category where you've already privately negotiated. You might have already spoken to somebody. We are absolutely flat chat at the moment, so I know we're getting tons of calls from agents as well. You might have already spoken to somebody. You might have already had at least a good enough relationship with the tenant to be able to come to some agreement, whether it be a short-term or long-term. What I'd say is you should be comparing it to the principles that Tim's just gone through, and you can also take the time to assess them. You might find that a lot of these deals are done in a way that already complies with the code, even if the code isn't in force yet at the time. Now, if they're not? So if they're not, then I think you should be running an analysis to see where are the potential problem areas and be saying, okay, so do we need to recast that agreement, possibly from a particular start date? And then what are the changes to be made? Now, it is a bit of an overhead that you might need to go back and revisit the agreement, but that's also something that we can assist you with if you find that you're not quite sure what your best course of action is. You can refer that to you can call, you can email, fill in a web contact form. And also you can consider getting into the actual more formal mediation process, where we can actually get a case manager on it and a mediator on it to help you work through what your risks are. I know there's always going to be different interpretations of things as well. Even the Retail Leases Act still has things which are litigated in courts. You still have leases which are drafted that don't quite clarify everything down to the finest detail. But I think we can certainly help you get a long way towards being as risk-free as you can be.
Yeah. Now, I've just had a question pop up about bonds. If the tenant was in arrears before all of this, are they able to get the tenant out and claim the bond or not?
So that would be a claim that really doesn't relate to any COVID impact. So I think what you'd be trying to do would be to really negotiate that in the first instance. And if you have a bond in a retail bond scheme, I know we can talk more broadly about general commercial as well. So as you're probably aware, if it is a retail lease in accordance with the Retail Leases Act, then if you use a cash bond, you would have to lodge that with the retail bond scheme, much like the residential bond scheme. Yeah. It's pretty standard. So you would actually need to either have the tenant's agreement or a court order, even without any COVID crisis code of conduct sort of principles.
Yeah, so normal processes, right, before this is appropriate in this instance?
Absolutely, yeah, follow the normal processes. And I think the code has some really important messages when, if you go right back to the Prime Minister's announcement about the National Cabinet, it's got some important principles about, it's got important overarching principles, and a lot of these make sense in any time, whether it's a COVID crisis or some other crisis. We've dealt with many crises over the years that affect tenancies, working with landlords, tenants, agents, lawyers on both sides. And it might not be as broad as a worldwide sort of pandemic, but it might even be local crises like a bushfire or just an economic issue. A building gets built, a building gets knocked down, and it really rocks that sort of local economy. It's not always the best idea to sort of just pull that trigger immediately and make a claim. It can trigger other things. So, and we're there to help as well. I mean, I understand certainly a lot of your members they haven't needed to deal with this very frequently. So we get a lot of people who are saying, look, this is essentially the first time I've really had to deal with an issue like this. And we're quite happy to provide that sort of interim guidance and really empower your members, particularly, are all fantastic negotiators. And it's really just empowering and building a bit of a framework, which I think will help them to have the best shot at dealing with the issue. But if you can't always do that, then we're also there to help with a bit of a more formal process as well.
Which is great to know. Now, what documents do tenants need to provide to justify the reduction? I know that there's conversation around it being part of the JobKeeper program, but what do they need to provide the agent? And when will we find out who has been approved for JobKeeper? How long is that going to take? And what happens if then we find out someone that we think is going to be approved is no longer approved?
Well, there's tons of ways that you can deal with that. I mean, obviously the JobKeeper programs are Commonwealth programs, so they'll have their own set of requirements you can go through. The interface, I guess, for your members is saying, so have they passed the threshold or not? The 50 million turnover threshold, I mean, you probably get a lot which are obviously under that threshold. That might be an easier one to deal with. But the JobKeeper, could be that there is some conditional agreements made. I should also point out that I think you are going to find a proportion that maybe don't meet the thresholds that are being talked about, but still there's going to be a call for negotiation on some aspects, short-term, medium-term, potentially long-term, because not just the shop front, there's a whole supply chain issue, there's ability to employ staff, there's a whole range of different issues. And you think about the businesses that you're dealing with think about your own business as well. The various impacts, it's almost, you couldn't be prescriptive enough to really have every single scenario covered
and
in a code
the challenge
or legislation.
for our that's the challenge for our property managers, because they are quite prescriptive and they do like the detail and they like to know that they're doing things properly. So it's a bit of a struggle for them to be able to get their head around all of this. So what documents does a tenant? Yeah, sorry, Sue.
Leanne, if I could just add, as part of our engagement with businesses, or in order to inform businesses, particularly around small business, we have a regular connection with the Australian Taxation Office, and as of yesterday, they just launched their guidelines for JobKeeper. So that's now literally less than 24 hours ago it was released on their website. So the provisions are that your eligible criteria will mirror the JobKeeper, and so whatever the documentation is for that would be what's required. In terms of the level of turnover, well then that's either your accountant or your ATO records, BAS records, or whatever. But yes, I would encourage everyone on the call to log on to the ATO website for those JobKeeper details, because the government announces these policies, but then it takes a couple of weeks to catch up with the actual the governance and the protocols and processes that support those particular policies. So.
Yeah, that's good. I'm sure we'll be able to provide a link to everybody for that website. Okay, so what is the understanding of outgoings payable under a net lease? i.e., is the rent as discussed under the code the net rent with outgoings separate, or is the rent per the code to be taken as the gross rent? That is, the rent and outgoings combined.
I haven't picked up any clear sort of guidance on that from the code. That may come through the further implementation as well. But it is a case that some deals will be really negotiated just as a gross up amount. And essentially what that does is say, if I'm grossing up the rent as a landlord, I'm taking the risk of changes in outgoings. If they go up crazy, then I got to wear it because I only negotiated a grossed up figure. Whereas at the start of the lease, if I'm able to negotiate maybe 100% of actuals, then the risk is all with the tenant. So the code as I've read it, I don't think it distinguishes. It doesn't make a point of that. Who knows? We may see something else. But I think you've just got to always go back to what you see as the source of truth, and that's where you'll be interpreting it from. But again, I think the deals that you're going to be making just need to be cognizant of that. If there's a discrepancy, a dispute, if it's meaningful, then you could build into whatever deal you've got the concern about that. And obviously you take legal advice if it's worth the money in taking legal advice, but you might find, depending on the nature of the deal you're making and the time frame that you're making, you might find that those sorts of distinctions are relatively contained in their overall impact. And you can always make deals, on this assumption, we'll make this deal. And if that assumption proves to be false, then it'll be a different way. But our mediators are absolute experts at helping people through that. So if you do get it into the room, we've got very well experienced, particularly our Retail Leases Act panel. They've all got experience in retail leasing, as you have to have under the Act when you're appointed. And so they're all very cognizant of those sorts of potential concerns.
Okay. Now, we talked about the fact that rent increases can't happen. So that includes the rent increases that are already in the lease, right?
I think it's only that's what, they're talking about. So it's, so rent increases typically going to have an anniversary increase.
Yeah, so that's not on. But Tim did mention turnover rent. So obviously in retail, turnover rent is popular. What happens with that?
Tim pointed out the code does say if it's based on turnover rent, then there's an exemption there. So you can go back and see the wording of that. where was the LCF? I've got freeze on rent increases except for retail leases based on turnover rent.
Mm-hmm.
So, I mean, my experience has been they tend to be the bigger end of town. You know, your supermarket anchor is typically going to be the turnover, and that's it. And maybe some outgoings, but so it may be that they don't even qualify. That might be a bit of a thin end. Well, I guess we'll see how it applies. But yeah, turnover rent exemption. That's what the code says. I think you find mostly that's not as much of an issue, and a lot of the turnovers that we see in the smaller and specialties, they're after a threshold. So you've got to be doing, you know, maybe you've got to do 2 mil before a turnover kicks in. They're probably not going to be making that in this climate.
No. So we've got a lot of really small landlords, you know, strip shops and that kind of thing. And some of them are saying to our agents and our members that they can't afford to give that 50% waiver and a 50% deferral. It's actually going to send them into bankruptcy potentially. What do you say in that situation?
You've got to probably get this one in to us to help you out.
Okay.
So, I mean, this is a problem that's faced. It's no one's fault really. It's certainly not a landlord, tenant, or agent. So this is nobody's fault. It is something that's it's either going to impact you slightly or it's going to impact you enormously. And we're really conscious of that there's a real jam for some of the very genuine business relationships. Business might have been great up until now, but it's really at the wire, and that means you're an investor. You probably you don't necessarily have 25 years to pay this thing off. It might be shorter term, might be much higher sort of amount of equity you got to have there and maintain there, and covenants from the banks are going to be, you got to have rent coming in essentially. If you don't have that, you've got a problem. So we're completely aware of that. But the question is, if you are in that situation, what's the best you can hope to make of the current situation? And I think one of the big takeaways has been this idea of can we slow things down? Can we find a way to, I guess, edge ourselves through to when we're coming out of this crisis so that we don't unnecessarily lose deals that really should have survived? And, the way people operate, it can be very, very emotional. Sometimes in a commercial context, you really need to be able to put the emotion to one side. Don't take any risky actions. Any day of the week, somebody says, well, we get plenty of agents calling us up who feel in a bit of a bind. Just normal times, right? Because they say, look, this tenant been around for a long time. Yeah, they've been behind for a while. The landlord's had enough. They want us to lock them out. Now,
I think, sorry, keep going.
You might be able to do that. You go and get your legal advice. But the question is it worth doing? Is it commercially the best opportunity? And I think your members will know that sometimes landlords are suggesting things that aren't necessarily in the best commercial interest. They just need to take a moment, pause, talk to someone,
take the emotion out of it.
Take the emotion, make a really good commercial decision, right? Sorry.
Sorry, Sue, did you want to say?
Yeah, look, I think I also want to put this commercial lease package that New South Wales government sort of announced on Monday, which is mirrors what was announced by the Prime Minister earlier in this month. But I want to put that into context of the other things that are available to small business. And it's when you're a small business and you've got such a catastrophic event that you're living with every day, you may not necessarily have the network to understand some of the other packages that government, both federal but also in the state of New South Wales, has put together to support small business. And so I just make sure that everyone on the call is across the payroll tax provisions, the suspension of some of the fees, which would impact some of the strip shopping businesses, and also the $10,000 grant. So really important that that anyone in a situation, small business that needs assistance, goes through the Service New South Wales team, which is the government's front door. And if it's to do with tenancy, then obviously it will end up within Michael's team. If it's to do with land tax, if it's to do with the grants, the Service New South Wales team will direct the particular individual. So there's much more than just the commercial lease package that is available to, I think many of the people on the call. So, and I think this is why it's important for us to certainly somehow collect from this this webinar some of the feedback about not just this lease package, but the extensive packages that have been pulled together by New South Wales Government. If somehow we can collect that feedback, we're meeting with other parts of New South Wales industry, and that helps us with those insights. It helps us inform policy and other things that we can do. So please direct that to Tim or to Leanne so that we can understand that.
Yeah, absolutely. We'll collate all of that and get you one document back. So thank you so much for that offer. I've had a question: if the landlord's already paid land tax, what do they do?
They will get they'll be able to apply for a refund. That's what I understand. Yeah.
Okay. Are there any guidelines on how to actually pass the reductions from the landlord to the tenant?
I can't answer that question. The land tax package is also very, very new,
Yes.
and we're in the process of implementing that alongside of this commercial leasing package.
Okay, so stay tuned.
Yeah, stay tuned.
Yes.
Stay tuned to, I guess, two key websites: the small business website, but also Service New South Wales. And the way that these sort of questions are being answered, it's really plain English. It's what do I do? What do I need to bring? What do I need to show? And it drops down with those answers, and then you can either be in touch on the phone or via online form.
Okay. Now I've got a bit of a crystal ball question here. How long is the reasonable recovery period? And I think what they're really asking is, how long should this be negotiated for? Is it something that we should negotiate for 2 or 3 months, and then at the end of that period look to negotiate for another period of time? How should they be approaching it?
Yep. Case by case, it is so difficult to be prescriptive. We would say you really do need to consider short, medium, and long term. In some cases, if the fixed term doesn't have that much longer to go, you're really only talking about maybe short or just short and medium. But you got to figure out what works and what's in the best interests of everybody to make it a deal that is worthwhile. So it's another aspect of our mediation process, is checking with both parties, really. You might get a deal in principle, you've sort of hatched it out over a few hours or however we're doing it. And you really need to test and see, well, is that legit? Is that going to stand the time frame that you're planning for? So we can be quite useful. Our mediators in particular can be quite useful in really being able to test that. You can imagine if you're relying on a tenant who may have a whole lot of uncertainty about their business themselves. You don't have the certainty about the business. They don't have the uncertainty. It makes it very difficult to actually find deals that are going to stand the time that you're planning for. So sometimes having a neutral third party involved is good to be able to sanity check that.
Definitely.
Trying to do that sort of one-on-one is can be very tricky, and you're still relying on information that you might not trust 100%. I was also going to mention as well so our staff have been providing advice and referrals wherever we can about a range of different things, and one was the Australian Banking Association. I'm not sure how many of you might already be aware of that, but there was an announcement 30 March about Australian banks extending 6 months deferral of loans. I mean, I can read it straight from the website, but I'm sure you can look it up yourself the title is Banks to Help Commercial Landlords Who Help Tenants Through COVID-19. And that's an Australian Banking Association link that we've had in our little knowledge base to give to people as well. It relates to that earlier question.
Perfect. Thank you. So if a tenant's chosen to close their business, they're not impacted by COVID-19, but they had made the decision to close the business, do they get treated the same way as they always would have, or do they need to get treated in line with all of these changes?
They've chosen to close. It's a good question. I probably have to go into the details a bit myself.
Yeah,
but
okay.
If they're choosing to close, the first question that comes to my mind is, are they actually closing prior to the end of the fixed term? And how close to the end of the fixed term are they? Because essentially you're going to, in normal times, you're going to do an assessment of what would be owing under the balance of the lease and what's the prospects of mitigation for that. And can we make some sort of a deal? Obviously, you'll have a bank guarantee, and you'll have or a bond or some other security that will factor into the negotiations. I think at this point in time, the profiles have shifted quite a bit. So if you are finding a business who's not able to continue, your prospects of mitigation within your tenant are probably less
bit of a challenge.
Short term.
Yeah, absolutely.
Exactly. Yeah. That's bad for everybody if that happens. But we can certainly help with that. By the way, it's not just negotiating deals to kind of stick it through. It's also negotiating deals that minimise the impact. And if that does mean winding up or reformulating is better for the parties, then that's what has to be done sometimes.
Okay. Just another one on the length of the deal. We've negotiated a rent reduction of 50%, reviewable after 3 months. Is that okay? It doesn't have to be the 6-month period. Yeah,
well, 3 months is still 3 months away, so you might have a further
who knows, right?
Further decisions to be made. Exactly. It's a bit of that crystal ball thing, but I think that makes sense to you look at the case and you go, well, what do we know? The nature of the businesses as well. There's some surprises out there. The shoe shop who is still selling, but they're not doing repairs. And it turns out the repairs happens to be a much higher proportion than you might think of their trade. Now, why aren't they doing repairs? I don't know. Well, people aren't going to work in their work shoes, so they don't need. But then if they're going to work in their work shoes, or if they're getting the duck feet out and they're comfy during the winter, then that's a different sort of thing. So it can be so complex. The kitchen really quickly pivoted to being a dark kitchen, and now it turns out in their area they had this sort of dominant position, and their impact is only -10% instead of -60% for the guy next door that wasn't quite ready for it. And that can change. It takes 3 months down the track, and suddenly people have adjusted, or suddenly things have gone worse. So it's really hard to make those longer term decisions. So I'd certainly be encouraged, thinking short term, and then maybe contingency. So if this works out, what are we doing in that medium term?
Yeah. I had another question on what are the documents that a tenant needs to provide, and we've sort of gone through that. So it is what is required for the job keeper program, and that's available on the ATO website, right? Which we will provide a link to.
Leanne, can I just correct? I'm just looked on the government's revenue website, and it's saying that if the land tax was paid prior to the COVID-19 pandemic, what happens? It's saying that the government will not provide a refund on payments already made. However, any outstanding balance, you can have an extension or a request for instalment plan. So, but I think the best approach with all of this is not to necessarily assume that you know the answer. These things change, and new instructions are provided. So keep in touch with the websites, or indeed give Service New South Wales a call, and they'll be able to provide you the most current information.
Yeah, and that is so important, because I know Tim and I have been delivering updates to everybody on a daily basis, and an update that we provide on Monday may not be accurate past Wednesday.
Correct.
You know, so you've just got to stay up to date. Tim,
Yes.
have you got any questions that you would like to ask? We've got about 10 minutes left. If there's anything you'd like to ask, or if there's any other.
There was one which was similar to the question you got about a property closing. If a let's pick it, a coffee shop, and their turnover has gone from 100% down to 50%, and they look around and they say, you know what, I just can't be bothered opening the front doors anymore because my revenue's gone down, so I'll just shut the doors. They didn't have to close; they just decided they would. How would that affect the code in somebody, the landlord applying the code?
So I think there's a part of the code which also refers to, it doesn't, the lease still stands. There's really no, the value of the contract is still supposed to be preserved as much as it can be outside of whatever specific, dot points in the code mean that that's going to have to be modified. So I think, again, you've got to go back to the code and keep those sort of principles in mind. See if I can have a look at that. But I think what you're going to be finding is some businesses do, they're not sustainable. You might say, well, they choose not to continue. Really, they're choosing not to continue because they can't, whether that be financial, whether that be they just don't have the will anymore. Will you find circumstances where they find a better offer and can take advantage of something? Okay, maybe, but then maybe you also have other causes of action. The laws of the land aren't completely suspended. This is really just a code that is a mandate to try to make deals that will help ride people through this difficult time and hopefully just get back to business and start ramping up as the recovery comes back online. I think case-by-case basis, again, you have to look at those. We're certainly very comfortable with dealing with all of those sorts of issues through our mediation process if you can't find that you get a satisfactory resolution yourselves.
I have one more, Leanne, if that's okay.
Oh, all right then. Okay.
So, normally when you would modify a lease that is registered, a registered lease, which in a vast majority of cases would be the case for commercial. If we then modify the rent or modify effectively the terms of the lease, does that then need to be registered at the LPI, or is there some exemption for that?
I'm not aware of any exemption. I know we introduced the sort of mandatory registration under the Retail Leases Act some time ago now, 2017. We did a roadshow on that, didn't we?
Yes, we did back in 2010 or earlier.
Oh, well, yes. But also, so, I mean, registration for general commercial leases is not actually mandatory. It's a very, very good idea, particularly if you're the tenant wanting to secure your interest. And then you have the Retail Leases Act that applies as it has applied since those amendments. The original, I think back in the day, it was you've got to register within a certain time frame if this lease is to be registered. But what changed in I think the 2017 era was no, we just want you to register it. But then again, I think it was the over 3 year scenario, not the shorter terms. But look, all that to say, I think you're going to have to follow the laws as they are right now, and I'm not aware of any changes that have been flagged in relation to the registration.
Yeah, well, I suppose if it was the case that it was sensible to register the lease at the time when it was done, and now we're modifying it, then save any legal issues. And when we talk about the Retail Leases Act, then the question has to be whether or not you would need to go down that pathway again, and then clearly there are some costs of that. So then the question always is who pays. So I guess again a further thing for our consideration as this unfolds.
Yes, there'd be practical limitations on registering, short-term variations, and then another one, and then another one as well. But yeah, I think you are right to consider the reason why you want to register, not just whether there is a mandatory registration, but also consider, because there are many where it is not mandatory. But if you were changing the nature of the deal for a longer period of time, you might agree as part of that deal, yeah, we're going to get this registered. We're going to register a variation, and then you can also make a deal on who pays for that variation. That can be just one of the dot points in the long list of sort of on the heads of agreement.
Thanks.
Okay, we've got a huge issue as well with the concept of the proportional reduction being based on the actual downturn, but tenants are all demanding the rent relief in advance, whereas you really can only work out the actual downturn at the end of the month, not the start.
Yep. So
it's just all a matter of negotiation, right?
I think it is. I don't think that's impossible to navigate, because essentially you run a ledger, don't you? So you can always say, well, here's the position at this point in time, here's what you've paid, here's what's owing. And it's really about adjusting a position on a ledger. And it might be, I mean, much like if you're doing actual outgoings, you're probably charging monthly installments on outgoings, but you don't know what the bill's going to come in at the time. So you figure out what's been paid by way of installments, what's actually owing, you do a reconciliation, then you figure out whether you're in credit or debit, and then you balance it out. So yeah, I mean, it's a relevant point. You don't necessarily have a crystal ball, and particularly early days, you don't know what's going on or where the trajectory will be. But I don't think it's a complete barrier. It just requires a little bit of maybe planning and analysis there. And again, something that I think our mediators, if you're really getting stuck on things like that, and probably a whole other range of different things going to be tricky, we can be of assistance to you there.
Okay, I've just got one last question, and that is how should these changes be documented?
I mean, we would always say you got to document things in writing, because it saves a lot of bother down the track.
Sure.
Do you go to the most expensive law firm in the land, and do you get them to draft a deed according to their precedent and argue the toss between two $500 an hour solicitors? Not always. Probably you're going to have to, at some point in time, be satisfied with the level of documentation that it meets the particular needs.
Yeah.
So often in a mediation scenario, when you're sitting down, you're going to end up with heads of agreement that goes away and it's put into some sort of format. It's 100% binding from the moment that you ink it. But what you have decided to do is that you want a deed or some other sort of form of the documentation. If it's a lower value issue, and you might not even be wanting, you might not have the capability really to get solicitors involved, still, we would say you want to enter into a binding deal. So, make it as thorough as you can be and get it in writing, because what you'll have is, if you walk away without that, if it's not thorough, if it's not evidenced in the written form, then you'll have these variations which are kind of like miniature disputes that spawn from the original one. And what we want to help you do is actually put the lid on this one and keep the lid closed.
Yeah,
so if you're using our services, we certainly have a level at which we really make an effort to make sure the lid stays closed and doesn't come back. If you are privately negotiating though, that I think is a great tip to take away. Try and evidence in writing, be really clear about what each other are signing off on. Have two signatures on one page if you can get it, or it's going to have to be identical counterparts if that's a bit hard in the current environment.
Yeah, the current environment. Yep. Okay, cool. And just one more has popped up. How are insurance companies viewing this situation in terms of income protection or business continuation, that kind of insurance?
That's a really good question, and we've been talking a little bit about insurance, not just in terms of income protection, but the whole facet of insuring business risk. And I don't have an answer, but it's a really good question. And like all these questions, we'd like to take them away, make sure that the people that are, you know, addressing business calls, be that from, you know, from this call or from any other small business reaching out to us, we're well prepared for the questions, and we can direct them in the right way. But I think that question, plus anything else that you come up with in terms of things that you'd like us to consider, yeah, please forward that to us, and we'll make sure that we've got some sort of response back through Tim and Leanne. It's really important for us to hear these issues, questions, ambiguities. It will enable us to make sure that as we're doing the implementation phase, we'll hopefully knock a few of these off and provide that clarity that you guys need.
Yeah, that's great. So I do encourage all of you to send your emails through to either Tim or myself, and we'll collate them and get them to Sue and Michael. Anything in closing, Tim?
Yeah, just one thing I should have mentioned, and I said to you earlier that the code is a flexible creature as much as is possible. And I did say to you that you have to have 50% of the rent to be a minimum to be waived. Having said that, though, the tenant who has the entitlement to that can themselves waive the obligation. So it could be the case, like Michael was saying, it's a case-by-case thing, that the landlord could say, I can do these things for you, a suite of these things, but I don't really want to waive the rent for you of 50%. And the tenant might say, look, I'm happy with that. I'm going to get this, and I'm happy to pay a larger portion of the rent than just 50%. So you don't have to waive the full 50%. So I think it's important that agents and landlords know that, because they can then go into a negotiation with far more tools to put on the table to try and work something out that is make everybody as happy as at least they can be.
That's the best part of mediation, is coming up with really great solutions that you didn't necessarily see from the outset. We need to change the way it was structured. We need a slightly different permitted use. We need a different option window. All of those sorts of things can be factored in and create some really surprising deals and really good for both parties.
Yeah.
Beautiful. Yeah. All right. Well, thank you so much, Sue and Michael. We really, really appreciate your time and your willingness to get input from all of our members. I'm sure that will be flowing in very, very soon. And yeah, thanks so much for being with us.
Thank you, Michael. Thanks, Sue. Yeah.
Thanks.
Thank you.